All right, everyone. We are back with a little extension of the webinar. So we went through all the questions after hitting stop on the webinar yesterday and realized that we actually didn't have names for everybody who had asked questions. There was a lot of people who were logged in anonymously. And so rather than try to get back to everybody one by one via email, we decided it would make sense to do a little extension here, just Chris and I, running through the questions that we weren't able to get to. We're going to try to keep it really quick. Not everybody's questions are going to be relevant to everybody else, but hopefully this captures everything that we didn't touch on yesterday. As well, as a reminder, we did cover a lot that was within the question set on yesterday's webinar, and you can reference that webinar on our website under the COVID-19 resource section, where it's going to live forever for free as an available resource for review. With that said, Chris, welcome back.
Thank you, Simon.
Okay, so let's dive right in, and let's try to keep this quick. I'm going to read through the questions, and if anything's not too clear, I'll probe a little deeper, but hopefully you've got everything here on the tip of your tongue. So jumping right in, somebody asked if we could specifically discuss issues pertaining to nonprofits, how they would show decline in revenue if they were not in fundraising season. So if this is a company that's going to be doing their fundraising months from now rather than right now, and they're unable to show a year-over-year or month-over-month change, how would that apply?
Yeah, I got it. And so unfortunately, for the nonprofits that do have those types of schedules, the revenue reduction specifications have become more clear for the emergency wage subsidy. And so it's pretty cut and dry right now. You've got the comparing year over year, or you've got the average of January and February. And this is actually one of the huge criticisms that I have, and that many have, of the way that this is being dictated, because it hurts nonprofits like this, and it also hurts some SaaS companies as well.
Yeah, no, that makes sense. Hopefully they'll make changes before they finalize everything.
I would not be shocked if they did make a change.
If you were a company that has hourly workers and you bring people back, but not on the same amount of hours per week, do you still qualify for subsidies?
Yeah, absolutely. So the spirit of the subsidy is to bring people back, is to rehire people, is to keep employees, with that employee-employee relationship. And so absolutely, you would still qualify. That's the spirit of it. Some cases, if the hours would be reduced enough, say you bring back a lot of people on very reduced hours, it might be worth it to think about, would some of the employees be better off with the CERB, and then we can give some of the additional hours to other employees, but that will obviously be case to case.
Yeah, that makes sense. In a similar line of questioning with regard to hourly employees, there was a great set of questions that related to how you're going to be calculating that 75% wage subsidy with regard to sort of pre and post-crisis level incomes.
Got it.
This is a confusing one. I barely understand it. Can you dive into sort of how these things might be calculated, or what people should be thinking about?
Got it. So there's actually a two-part answer to that question. The first part is the more simple part. The 75% that you're going to receive back as part of the Canadian Emergency Wage Subsidy, while it does have certain caps up in I think it's 58,700, the 75% is on the total remuneration paid, no matter what. So you're going to get that 75% back. The tricky part of the question that you just asked, and a part that actually hasn't been solved yet, or hasn't been stated yet by the CRA, and I'm gonna reach out to some contacts. And so if people hear this and then we'll provide my email as well. You can reach out. But the tricky part of this is that if you had two hourly employees, both making $20 an hour, one worked 40 hours a week for the month up until the crisis, and one worked 20 hours per week, they both have the same annualized pre-crisis wage earnings, but do they actually both have the same pre-crisis wage earnings? And how are you supposed to calculate that? And so that is actually not clear yet. That's something that I'm going to be investigating with my contacts, and hopefully they make it clear. And I'm going to also be asking on behalf of small business, and especially those that have hourly workers for the CRA to make a posting about that.
And is that, and just for clarity there, the way that I understand this, it's that the government will pay for up to 75% of pre-crisis wages, even if you're not paying the last 25%. So hypothetically, you could be capturing the government could be paying 100% of that current wage, so long as that wage it equals your pre-crisis wage. But then how you're calculating pre-crisis wages is actually really confusing, unclear to this point, and hopefully they'll clarify that as well.
Exactly. So it's no matter what, it's going to be 75% of the remuneration paid, but it's, how much can you do a wage reduction and still capture that full amount is unclear, because it's unclear how you're going to benchmark that pre-crisis wage earnings.
Okay. Yeah, that's a confusing one, and hopefully they clarify it. If you were going to bring people back, and it's only be a portion of the staff, that's okay as well, right? There's no impact on your eligibility.
No impact on the eligibility at all. And for the 10% wage subsidy, obviously it applies to everyone that earned any remuneration at all within the period. And then for the 75%, of course, whomever you bring back.
How about if you don't qualify for the 75%, maybe you do for the 10, but your business is heavily impacted. A lot of people asked, is there going to be, or is there any additional support for companies, between these subsidies?
So that's obviously a great question. One of the things that I would highly recommend you to do, if you're watching this recorded video, you've got the PowerPoint presentation that I had prepared. Just go to that For Businesses page. I don't remember the exact page number it was, but go to that For Businesses page and click the little maple leaf. It'll bring you directly to that For Businesses page and show you all of the different things that are available. One thing that is not even up there yet, but was announced yesterday, and just yesterday afternoon, was that Trudeau went and did a press conference around all Canadian small businesses are going to get access to $40,000 in interest-free loans, 25% of which is going to be forgivable if repaid within 2 years' time. So that's a great way for a Canadian small business to pick up a free $10,000 to help them get through this time, as well as the access to that $40,000 in credit as well.
And that program for $40,000 is available, correct me if I'm wrong, to businesses who have under $1 million in annual payroll?
That's what it looks like. It looks like if you are going to be eligible for that Canadian small business tax credit, it looks like you'll also be eligible for this. Again, this was literally just announced. There's not even a whole bunch of documentation around it yet. But one of the things, and this, I guess this is another little plug for Humi, but our marketing team is doing a fantastic job of keeping everyone up to date on these new things. And I myself write a lot of those articles. So just keep a lookout on the COVID-19 pages there, and we'll help you out when they come out.
In terms of capturing the 10% wage subsidy, if you didn't reduce your remittances on the first available pay run, does that stack? Can you capture that on your next pay run or the pay run after that?
Yeah, I wouldn't use the word stack, because it's not that you claim double for that period. You go back to the previous period and claim it retroactively. But you definitely will get it. There's no missing out. You can actually you can miss out on claiming it the entire period and then go back and claim it for every period retroactively. So as long as you have a payroll provider that has the know-how to do that, you're all set to go. You don't have to worry about missing out on any of it.
Okay, cool. Similarly, a timing question here. Are these subsidies based on when the employees worked, or when the employer cut the payroll checks? So again, is it the time worked, or when they were paid? That's a complicated thing in the payroll world that I feel like a lot of people get wrong, even for their taxes.
Yeah.
How is this working with regard to the subsidies?
So it's actually for the pay period worked. So what that means, and we'll just use a really typical example, is that April 1st to April 15th is generally a semi-monthly pay period, and some companies will have days in arrears, and days in arrears means that people don't get paid for the amount of work that they do up until that day. They get paid maybe on, instead of April 15th, maybe April 20th. And that often happens with hourly workers, because you need to get timesheets in and stuff like that. But for the purpose of the subsidy, it is the pay period. So the period actually worked. It's not when the payday is. So at the beginning of the period, what that means is that if you had a days in arrears and a payday on March 20th for work from March 1st to 15th, that period does not qualify at all for the subsidy. And then the inverse would be true when we get to the end of the eligibility period in June. Even though the payday is going to land outside of June 20th, maybe on June 25th for work between the June 5th and June 20th, you would absolutely qualify for that.
Okay. Yeah, that's another tricky one that people definitely have to pay attention to, because I know that just to me seems like something that would be easy to get wrong.
Definitely.
This is another really sort of tricky question, in my opinion. I don't know if you have the answer for this, but if you are a restaurant or a business with multiple locations, how would the 30% revenue reduction work? Are you combining your businesses? Specifically, I guess the specific question was asked by somebody who's paying from one payroll account. So, if you have one payroll account, multiple locations for your business, is the revenue reduction just across the board? Is it on a per location basis? Do you know how this is going to be functioning?
So I believe that I do know. So for the 10% temporary wage subsidy, for sure, the number of locations doesn't matter. It's really just the remittance on the payroll. And then for the 75% as well, my understanding as of now is that it just matters what the business number is. So if there's multiple different, like it's really a bunch of different companies under an umbrella company, if they have different business numbers, you would have to prove the 30% drop on each one of them. And then subsequently claim the 75% for each one of them. But if it's all one business number, then you just prove the 30% drop for the one business number. And the reason that I believe this to be true, even though it's not published as yet this far, is that the 75% collateral is likely going to be the collateral that you're going to need is likely going to be based on when you're filing taxes and stuff like that. And so generally all that stuff happens as one business number unit.
Cool. Okay. Yeah, that makes sense. Jumping into some questions about specific employee types. If you're the shareholder or owner of a business, my understanding would be that you still qualify if you're being paid on payroll.
I mean, exactly. And so from my understanding as well here, the CRA is doing this in quite a fair way. If you have been paying yourself for a long period of time on payroll, you're paying the CPP and the payroll taxes, then you're going to be eligible. If you were not, and I would really caution and advise, and again, it's not super clear yet what the repercussions would be, but I would advise against trying to put yourself on payroll to qualify for that subsidy, because that's going to look like a non-arm's length move for the most part. And so again, I'm not an employment law expert or anything like that, but it does seem like that would not work the way that you might think that it would work.
And similarly, then for people who are self-employed, if you've been paying yourself on a payroll software or otherwise on a payroll account, you would qualify. But if you're self-employed,
Yep.
It would be, I guess, similarly, you can't just fire up a payroll account and start claiming a subsidy.
Yeah, that it seems to me like the way that it's going to work is that if you're on payroll, you're going to qualify. If you're not on payroll, then you won't qualify.
Okay. So
And
for most people then who are self-employed, you're going to be looking at the CERB.
exactly, the CERB is going to be likely the best way to get some remuneration during these times.
And then, again, the sort of the last group of people here, in terms of special treatment or different employment situations, would be questions about students, summer students. So if you were going to hire summer students and you had to cancel their contracts, do you know if they would qualify for the CERB? There was a specific question about that. What would be available for summer students?
Yeah, so for summer students, they likely won't be candidates for the CERB, because you would need to show that they had made at least $5,000 in that employment year. So maybe in certain special circumstances they may, if they had earned enough during the year and then went on to lose out on an opportunity that was going to be imminent. and then they would be able to apply for it, but that will be very case to case. For the most part, they won't be qualifying for the CERB, but there's a whole new, Canadian Job Summer program that will pay up to 100% of their wages. And so it looks like the Canadian government is really incentivizing people to not cancel those programs at all. So I would again advise you to go to that for business little maple leaf in the PowerPoint presentation, click in there and go read a little bit more about that Canadian Summer Jobs Program, because they're adding to that, every day. It's
Yeah.
the information I give you guys now will change by Monday morning. That's for sure.
That one was one that I specifically also looked into for us. It looks as though that's a program that typically does exist. They had closed applications, I believe, sometime in February, but are going to be reopening businesses to apply for that program, and that 100% of wages under the program will be covered. They'll pay a maximum of minimum wage, I believe it is.
That's awesome.
But nonetheless, probably the best way to make sure that your summer students or summer co-ops are going to still be coming on board.
Yeah.
Another, separate question, moving away from, specific employment types. And again, like this one just maybe is not clear to a lot of people, but if you are receiving the 10% wage subsidy, that's not a loan. You don't have to pay that back. That is just a pure subsidy that is in your pocket forever.
That's a pure subsidy that's in your pocket forever. Exactly. There's no paying that back. That is a pure income tax reduction. It is taxable income. That's the one thing to remember. So you do have to pay taxes on that. It's like any other type of revenue.
That makes sense. Was there anything else? That really covers most of the questions that we weren't able to get to. If you didn't hear your question answered here, definitely refer back to the webinar. There's also obviously there's a lack of clarity around a lot of detail with regard to the 75% wage subsidy and how the revenue recognition is going to work. Again, I would just highlight that we will be covering that in detail as soon as more solid final information is provided by the government. But Chris, is there anything else that you want to add before we sort of sign off here today?
No, I mean, I think the very last thing is just that I recognize, and obviously am in a position that I interact with the Canadian small business owners and entrepreneurs, and it's every single day in the position that I'm in, and so it's been an amazing time, and like one of the hardest times as well for people. But I've seen that it's been really awesome to see how much employers really care for their employees. Like the huge bulk of the questions that I get is about how can I keep my employees paid? How can I make sure that they're getting the best thing financially for them? How can I make sure that we keep this company together? And it's just been really awesome to see. So I just want to do my part in making it as easy for people as possible to not miss things that they're entitled to help keep these employees going. And then really just if we didn't answer your question and you're at this part of the video, feel free to reach out at support@humi.ca or and CC Chris at humi.ca, and we'll be sure to get back to you.
That's awesome. Very generous of you to offer your time. I know you're a busy man these days. So, with that said, that concludes, this webinar. Obviously, again, we're going to continue to cover this specific issue with content on our COVID webpage. And as well, we're going to continue to produce webinars that try to be helpful where we can be. So looking forward to hopefully seeing everybody again soon.